hope you're doing great. I am going to be making a recommendation in this video in the next few minutes, and I wanted to invite you to come to BayRockFinancial.com. I changed the homepage today so that it will take you to the page called BayRobo, and this is the name that I've given to the investment strategy that I'm going to be recommending to all new clients and to my existing clients who qualify. So if you will just kind of go to BayRockFinancial.com and you'll be on the page where this video is being played. And I'm going to start off with a short story. It's a little longer than I hoped. It's about 13 minutes, but it's a story from my days as a State Farm agent that will set the table for the recommendations that I'm about to make to you. Whether you're an existing investment advisory client or a client who's managing your own investments or someone thinking about working with BayRock, this is my recommendation, and I will go through them in this post, in this video. But first, here's a story from back in the day when I was a State Farm agent. Today I am introducing BayRobo. It's what I call, it's the name I gave our new investment strategy at BayRock Financial. And I want to tell a little story about when I first became a State Farm agent in a little town called Ridgway, Pennsylvania. If you look at the map, you'll find Ridgway. You'll first see in western Pennsylvania, there's a big green blob. It's the Allegheny National Forest. If you look at 3 o'clock on that big green blob, you'll see a little town called Ridgway, R-I-D-G-W-A, no E in Ridgway. And Ridgway is the county seat for Allegheny County, and I was the only State Farm agent in the town. I had a big problem, though. In Ridgway, Pennsylvania, being a guy from Houston, Texas, I had to earn trust from the folks in Ridgway. It wasn't really that difficult to earn their trust. They were really good people and open to good advice. My challenge was to take all of my knowledge and expertise in the insurance world and try to help them make good, informed decisions about their insurance. And most of the folks I worked with then and most of the folks I work with now were interested in making good decisions in terms of saving money and getting the best value for the dollar. And that's something that is what I want. And so for me, at that time, when I was a new State Farm agent, I wanted to help them make an informed decision that could add value to our relationship. So that was my goal. I had a pretty big agency, over 2,000 cars. I was the only agent in the town. It was a fantastic opportunity, but it was challenging. And so one of the things I did at the time, there was, and I'm telling you this story because I'm about to do the same thing with you. If you're a BayRock client or considering working with BayRock, I want to invite you to consider my recommendation. As a financial professional, making recommendations is part of my job. Being a fiduciary means I make recommendations that are good for you. When I was a State Farm agent, I was not a fiduciary, but I did try, just like a fiduciary, to help folks make good decisions for themselves. Obviously, as a sales professional, there's another side of that coin, which is making decisions that are good for me. And the story that I'm telling you about being a State Farm agent, the story I'm about to tell you, I discovered that part of my commitment to helping my clients was very expensive for me and for my team. And the proposal that I'm going to make today in terms of our investment strategy changes at BayRock are similar. It's going to be a lot of work for me and my team, but I'm making these recommendations because just like then when I was a new State Farm agent, I want to give you the best advice possible. And the fact that it's going to create a lot of extra work for me and my team is part of the deal. It was at that time when I was a State Farm agent, a new State Farm agent, I made this recommendation to them. I'll tell you about that in just a second. But it was a huge amount of work for me. and my team. And so what I'm about to do today in terms of recommending our new investment strategy is going to be a lot of work for me and my team. But I believe it's the right thing to do, and I'll get to that in just a minute. But the story that I want to tell you about being a State Farm agent in Pennsylvania, there was a big change in the law, tort revision. Tort is, you can look that up, Google it, but tort has to do with liability. And so insurance, car insurance in Pennsylvania had this huge mandatory change. As a consumer in Pennsylvania, when you bought your car insurance, you had to choose between full tort and limited tort. And it was a big decision. It meant the cost of your insurance would more than double if you decided you wanted to keep full tort. What full tort was you as a consumer conserving or reserving your right to sue. If you were in an accident, you were injured, you kept your full right to sue the other party no matter what. And so limited tort, because in Pennsylvania there was this huge cost associated with lawsuits. And so the state regulators wanted to give consumers the opportunity to reduce their cost. And the only way they knew to do that was to write a provision into the law that impacted insurance, that gave you as a consumer the right to choose to limit your ability to sue the other person. Now, if you're a State Farm agent, if you're an insurance agent, I should say, and you know that your client could choose to save a lot of money, or they could choose to keep their right to sue, your tendency could be, might be, maybe, to try to scare the client to say, you don't want to give up your right to sue. And that seemed to be what the agent who retired, who I took over for, that seemed to be his philosophy. And it seemed to be the philosophy of a lot of agents. But what seemed right to me as a consumer, as someone buying insurance, was the fact that I could reduce the cost of my insurance significantly. In fact, what I could do for myself and what I could do for my clients was this. I could take that insurance policy and I could reconfigure it so that the coverages that you had on your insurance policy, things like liability, instead of having $25,000 or $50,000, you could have $250,000, and you could have sufficient coverage so that you could purchase a personal liability umbrella policy for just a couple $100 a year. And you could do all of that and really walk out the door without having any additional cost to your insurance. So you could take your insurance coverages, which were not very good, and improve them so that they were smoking hot. Excellent, great, including rental coverage, emergency road service, uninsured and underinsured, full high coverage limits and liability. So all of that, including comprehensive and collision with relatively low deductibles. And my goal, my team's goal, was to configure your insurance policy, your car insurance policy, so that you had great protection at a very low price. But to do that, you had to make a choice to give up your full tort. And it really wasn't as scary as many people tried to make it out to be. The reality was, if you were in a bad accident and the other person was grossly at fault, you could still sue them. It's just frivolous lawsuits were really going to be prohibited in this if you took limited tort. And in my opinion, it was the right thing to do. It was a good, reasonable thing for the regulators to do. And so as an agent, one with superior knowledge than my clients, I did my best and trained my team to do their best to help clients make an informed decision, which was the best decision for them and their family. It was a very difficult thing to do because they had a mindset, because they trusted the old agent and they didn't trust me. So I had to show them how it worked and how they could have better coverage. And by the end of the conversation, almost always people walked out my door feeling like they made a really good decision. And once they walked out the door, my team and me was left with a pile of paperwork, because each of these changes required a signature that had to go into State Farm, into the operations, and that those changes had to happen in their policy, which created a mountain of policy changes. Not only a mountain of policy changes, but a mountain of changes to if you know what I'm about to, if you're a State Farm agent, these words will scare you. State Farm payment plan. Ask your State Farm agent how they like the State Farm payment plan. It's a great tool. It allowed you to pay a monthly bill instead of an annual bill or a 6-month bill. The problem was if you were a State Farm agent or a team member and you made changes to policies, it created a nightmare trying to explain that to clients how their bill was changing. So that's what we were doing. The goal was good. The outcome was great. It resulted in clients who trusted us and who continued to buy insurance from us and who were willing and open to have conversations with me and with the rest of the team about life insurance and disability insurance and products that they'd never heard of before from the previous agent. Products that, frankly, I had to sell as a new agent in order to keep my contract, in order to stay a State Farm agent. But they were products that people needed, but they just needed someone they could trust to help them see the benefits of purchasing those products from a company like State Farm. So that story I used to set the table for the pitch, the proposal, the recommendation that I'm making to you, my client, or you, new client who's onboarding with BayRock. I want you to know that when I started BayRock, after going to work on Wall Street at Morgan Stanley in the wealth management department, after being a State Farm agent for many years and even becoming the first certified financial planner for State Farm, the only certified financial planner for State Farm in the Houston area, first and only CFP agent. So after doing that and then going to work on Wall Street, where I learned everything I needed to learn about investment management, the one thing I never did find, even as a certified financial planner, I was always looking for an investment advisor who could look me in the eye and tell me that this investment strategy, this investment vehicle, this investment program is the same thing I invest in myself. It's the same thing I recommend to my family. I thought that would be a very reasonable thing to expect from an investment professional, but it's not. You don't find very many financial professionals who say, here's what I do myself. Some do. In fact, in my opinion, it's the best and most powerful way to sell. So when I started BayRock, that was my number one goal. I wanted to be able to recommend to clients investments that made so much sense that I did it myself. I knew what I needed. I learned what I needed to learn to know the best approach to investing. And so I'm not going to spend a lot of time in this video, in this message, telling you what is inside of the BayRock portfolios. I'm going to talk a little bit about that in the next few minutes, but right now I just wanted to share a story about back in the day when I was a State Farm agent and I made recommendations to my clients that were the right recommendations, but they required a tremendous amount of work for me and my team. It was worth it. I'm glad we did it. But that's the way this is. What I'm about to explain to you, what I'm about to propose to you, will require a good deal of work on our end. For you, it's just a matter of e-signing a DocuSign envelope or two, and we'll do the rest. It may seem complicated, and I'm sorry if it is or if it feels that way, but what I'm about to recommend to you is what I'm doing in my investments. It's what I'm doing for my family's investments. And so just like the story from back in the day as a State Farm agent, I've given a lot of thought to what it's going to take to convert all of my clients to this new investment strategy scheme, and I believe it's the right thing to do. You don't have to do it. I'm available to answer any questions and visit with you as much as you need before you make a decision, but I want to be very clear in making the recommendation. Just like I was back there in the day when I became a State Farm agent, I knew what I believed was the right thing to do, and I made that recommendation very clear to my clients, and it was what I was doing, so it was easy to say, yes, if I were you, I would do this because I'm me and I did it. And so that's what I'm doing in my investments is what I'm going to be recommending to you. So thanks for listening to my State Farm story as a State Farm agent. That story, I've been thinking about it for a while because I'm about to become very busy working on this project. Okay, like I said, thanks for watching my short video. Now I'm scrolling down the page, and you can do the same. I want you to, I need you to understand a few things. What I'm going to do at the end of this is just ask you to let me know if you want to accept my recommendation. There's no hard feelings if you don't. If you want to schedule a meeting, you know how to do that. Just email me or hit the link at the bottom of my email signature and schedule an appointment. And I'll spend as much time as you need or want to go through this strategy and make sure it's the right thing for you to do. Again, it's what I'm doing for myself, and I've always sold as an investment advisor at BayRobo. One of the biggest benefits of having my own firm is to be able to say, here's what I'm doing with my money, and here's what I'm recommending for you to do as well. So it starts off, the investment strategies at BayRobo start off with an ETF, an exchange traded fund. So I included in this post some links and some information about what is an exchange traded fund. You should know what that is. If you want to know what that is, I've made that available. If you don't, if you just want to say, I trust you, Jim, and I want to do what you're recommending, just know that we're investing in exchange traded funds. They're very highly liquid. They're very low expense, very tax efficient. All of the things that an investment professional would want is part of an ETF, an exchange traded fund. It's kind of like a mutual fund, but better, in my opinion. So there's some information on the website for you to look at if you want to know more about an ETF. Next, I want you to know the old home page was pointing you to the inflation planning blueprint. So I'm just going to talk about that for a minute, and you can click on the link here and it will take you to that old page. I think there it is. So I'm going to go back. It really just outlines kind of the process we use at BayRobo for the financial planning process, but it also highlights the need for certain attention to your financial plan because of inflation. And I want to talk about inflation just briefly. Inflation is the reason that the Fed is raising interest rates. They are committed to keeping inflation at bay. To do that, they're raising rates, and when rates go up, the stock market quakes. And so I believe we're going to see some volatility continue in the markets for some time to come. And so that volatility in the market is going to create a little bit of pain, and it's also going to create some opportunities. And so the BayRobo approach to investing, this strategy that I'm recommending, will take advantage of that opportunity and give us the ability to protect and manage risk more effectively than we are today. So I want to just highlight before I get started in the recommendation that financial planning, sitting down and reviewing your goals and your priorities and your actual financial situation, that's way more important in terms of value for you than investment management. So you can hire me at BayRobo, or you can hire a number of investment managers, and we're all going to do within a certain realm not that much differently than one another. The market's going to do what the market's going to do, and we all try to figure out how we might do a little better or save. My goal is always to try to have less losses on down days and down weeks and months. And that comes with a little risk too, because if I set up your portfolio so that you don't lose as much money as the next guy when the market tanks, chances are you're not going to make as much money as the next guy who lost more money when the market goes through a quick upturn. And the market is going up and the market is going down all the time, and we've had lots of volatility, and that's why this strategy is designed to focus on somewhere in here I have, well, I guess I don't have it here. Sorry if I'm making you dizzy. I'm scrolling down to find the next section, which is investing in volatile markets. So I grabbed some content from Charles Schwab. This is not my own content, but it made a lot of sense to me. And these are just good reminders. It's got a chart here that talks about bull and bear markets. Now, I think we're in a bear market rather, but we're in a market that I think is going to go up and go down. In a bear market, when the market's going down, we see some really big upswings, and we don't want to miss those because there's a few days in the market that you make enough money for the whole year, and you don't want to be out of the market. And so that's the challenge for me as your investment advisor and investment manager, is to not get you out of the market completely, but also on the other hand, I want to do everything I can for my investments and yours to protect us from those downturns, and they're coming. So anyway, there's some information about that, about bear markets and bull markets. And bear markets last a lot less time. They're shorter than bull markets. So, but the truth is, I believe we're going to see, like we saw, not in the last 10 years, but before that, we saw about 10 years where the S&P 500 started and ended in about the same place. And so what that means is the market goes up and the market goes down, and it's in some kind of range. And I think that's how I'm planning my investment strategies, is to manage the investments in that range, because the market's going to go up so high and then it's going to go down. And I'll show you some charts as we move forward to help you understand what we're doing to manage that risk and that opportunity. But it starts with your risk number. So if you're not sure what your risk number is, I would encourage you to click on the little link here and update your risk tolerance number. If you're new to BayRock, that's where we start. If you're an existing client, you just need to know what your risk number is. I know what your risk number is, and when we get together, we'll talk about what that number is and what it means and why that number tells us what you can kind of expect in a 6-month period in terms of gains and losses. So if you have a high number like an 80, you would expect to have in a downturn a pretty significant loss, but when the market's in a bull run, you're going to benefit more than someone with a 50 point or a number 50 risk. So my wife is about a 45 and I'm about a 60, and so I'm much more risky than she is. But what your risk number is very important, and it's part of the process of financial planning. So if you don't know what your number is, let's fix that so that we can have an informed conversation about your risk number. And that link is there. So let's see, these are some other just basic ideas for how to manage investing in a volatile market. The next thing I want to talk about for a minute is options. If your chances are, only a few of my clients have been given the ability to trade options, for me to trade options in your account. I'm not going to go into great detail about what options are, how they work, but I want you to know that I've been trading options for many, many years. I learned how to trade options from a man named Tom Sosnoff. He taught me most of what I know. I've continued my learning for years and years. I learned to trade options on the Chicago Board of Options Exchange, and I think the key to options trading is to sell premium. Tom Sosnoff, his 2 words highlighted his course. It was sell junk. That was his way of saying you don't want to be buying options, you want to be selling options. So I'll talk more about that in the weeks ahead. And if we get together, I'll just so you know, that's my strategy, is to sell options. The reason we want to sell options is to manage risk, but also to create some revenue in your portfolio. So now I want to get to and like I said, I'm going to talk more about, and there's a video here about trading options, and I can give you as much information as you want. But I need you to know that this strategy that I'm recommending includes putting options in your account. If it's a taxable account, like if it's a trust account or a joint account. If it's not an IRA or a 401k or a Roth IRA, then it's a taxable account. Excuse me. And so we don't want to just do options. We want to have margin and options in that account. And I'll explain why when we meet if you want to talk about that. But in my account, I have both margin and options. Both of those include more risk, but they also give me the ability and the tools to manage that risk in a more effective way. And it's more work on my end, but it's, like I said, it's what I'm doing in my account, and it's what I'm recommending for you, is to have options. And if it's a taxable account, you should have margin in that account as well. Now, just to note, if your account is less than $500,000, then we really shouldn't even be talking about options and margin in your account. We can have that conversation if that's your situation, but if you're thinking about doing this strategy with me, really it's for $500,000 and more. Typically it's $1 million account that we would be working with. But if you're already a client and you have less than that, I'm happy to visit with you and talk about what we can do in your account. But if you're new to BayRock or you're thinking about coming on with BayRock, typically it's over $500,000. It just doesn't work in small accounts. We have strategies that work, but this one, the BayRobo, with options and margin, doesn't work really well in small accounts because you need more money in your account to trade the options depending on what we're trading options on. So again, I don't want to get too deep in the details on this. I just want you to know that the basic strategy involves having margin and options in your account. If you've got a trust account, a joint account, we want to have margin and options. If it's a tax qualified account, you won't have margin, but you will have options. And so that will do that. Now, so there's plenty of information there about options. Now let's get to the BayRobo part. You see that's a robot arm. And robo comes from a kind of a new term. It's robo investing. It is done with an algorithm. And Charles Schwab has what they call an intelligent portfolio, and I use it. I've used it from the very beginning, and it's done quite well. I like it. There's lots more information if you want to know more about it, but in a nutshell, it's trading with an algorithm. Now, it's a whole different platform than you're on now. So what we're going to have to do, what I'm doing with my accounts is, for example, I have an IRA account, I have a Roth IRA account, I have a joint account, I have an individual account, and each of those accounts I've set up sister accounts. So my IRA account, my wife's IRA account, my Roth IRA account, and my wife's Roth IRA account, and our joint account. So that's 5 accounts. And what we're going to do, what I've done already, is we've set up sister accounts for each of those 5 main accounts. So we will trade options in those 5 main accounts, and we will create as much revenue as we can through fixed income investments and bonds and structured notes and treasuries. Treasuries are paying 10-year treasuries paying about 4% right now. So to manage risk, we're cutting back on our equities a little bit and taking advantage of the higher interest rates, and we're raising some cash. And that cash then, for those 5 accounts that I just named, that's in my family, we will have 5 sister accounts. I'm calling them sister accounts, but they're smaller accounts that are set up on the different platform at Schwab, the Intelligent Portfolio platform. And on that platform, that's where we get all of the benefits of dollar cost averaging, tax loss harvesting if it's a taxable account, portfolio rebalancing. These are powerful, very effective investment strategies that operate automatically in the intelligent portfolios. So it allows me to give you the benefits of some pretty advanced investment strategies that are automated through artificial intelligence algorithm. And again, it works really well. So we're going to be raising cash in your main accounts, setting up a separate account on the other portfolio, on the other platform, the Intelligent Portfolio platform. And we'll be feeding those sister accounts, and we'll be raising money and letting the platform do what it does. Over time, with dollar cost averaging, that's a systematic investment into that portfolio and allowing it to rebalance. As that over time, that's going to work really well, especially in a volatile market when the market's going up and down. Those strategies work really well on that platform. And then as we get to the point where the market gets back to normal and goes up and maybe gets a little extended, we will just take that money, half of that money, all of that money, we'll see. It will depend on your situation. It will depend on the market. But we'll basically be using that platform to grow your investment systematically, and we'll just have that available to transfer back into your main accounts. So you'll have 2 accounts instead of 1. If you currently have 3 accounts, you'll end up with 6 accounts, and that's how BayRobo is designed to work. So we're using 2 different platforms. They both have very different features and benefits for you in terms of account management. Again, I'll answer any questions you have if you want to talk about that. But the basic idea is we're going to set up options on all of your accounts, margin on any taxable accounts, and we're going to set up a sister account for each of your main accounts so that we have access to the intelligent portfolios with dollar cost averaging, portfolio rebalancing, tax loss harvesting. That's all. Excuse me, that's all automated. So that will work really well. Excuse me. So now, here's what you need to do. I think if I scroll down, and again, there's much more information in this post if you want to just do a little research and look at it, look at the additional information that's available. And again, I'm happy to meet with you whenever you're ready. But all you need to do is tell me, yes, you want to do this, or we can have a meeting and we can talk about it more. But when you're ready to move forward, I will prepare and my team will prepare a DocuSign envelope for you, which will make it super easy for you to authorize us to get started and get this moving. And I have a cute picture. I saw that picture and thought that picture is I have a little dog, Lucy. Doesn't look anything like this dog, but I just liked it, so I thought I'd share it with you. So that's about it. That's my proposal. That's my recommendation. It's called BayRobo, and it involves options and margin and the intelligent portfolio, our sister accounts, and I think it's the right thing to do. And I'll be talking about this on my podcast, Missional Money. Also, one more thing before I let you go is I am going to have to hire and train a portfolio management apprentice. So if you know someone who wants to get into the business of wealth management, I'll be posting a job description and I'll be hiring and training probably more than one person on the team, one person for portfolio management to do the job that I'm currently doing, because frankly, I don't want to be looking at charts 24/7, and I'm doing a lot more looking at charts these days than I really want to do. But I'm happy to do it. I need to do it for my accounts, and I'm doing it for yours as well. So let me know what you think. I'm looking forward to hearing from you. This is my way of inviting you to consider my proposal, my recommendation for the BayRobo investment strategy. And I hope to hear from you soon. And I'll talk soon. Take care, and thanks for watching my video.